Righto, let's look into calculating some stuff about tax. We're going to start off looking at just definitions because, again, there's words that you need to be used to. As we mentioned before, net income is what's left over. Okay, it's what's caught in the net once the tax has gone through. So it's your the gross income minus the tax paid. Okay. So the tax comes out of your gross income. The gross income does not reach your bank account. What hits your bank account is the gross income with the tax taken out. Okay. Tax deductions. So these are things that hopefully will reduce the amount of tax that you pay. So the big one, which will relate to you guys, is work-related expenses. All right. Now, that can include a variety of things. Uniform expenses. If you have to buy your own uniform, if you have to launder your own uniform, which most people do, you can actually claim that as a cost. If you have to pay for any training, okay, if you have to go and do a course and it comes out of your pocket, you can claim that. Use of your computer, your phone, or your car for work. Okay, now that does not include driving to work. Okay, you cannot claim that. But if you have to go and pick up something in work hours from your place of work and you've got to use your car, you can, if you record that information, you can claim that on your tax. All right, last one is donations to charity. If you give to Red Shield Appeal, if you give $10 to the Red Shield Appeal, they will give you a receipt and you can claim that. Okay, so they're the two big ones. The other thing that I'll just squeeze in here, tax management. So if you use a tax agent to get your tax done and they charge you, I don't know, $150, then you can claim that on the following year. So that's something to consider. Okay, so taxable income. Now, taxable income is not necessarily the gross income. The taxable income is the amount of income used to work out the tax. The tax that must be paid. Okay, so they start off at the beginning of the financial year and say, right, this is your projected income. Based on that, we'll figure out the tax that is paid. Now, what it equals is your gross income minus tax deductions. So here's the hint of how it works. If your tax deductions are these things, why are they important? Well, it reduces the amount, it reduces the number that is used to calculate the tax. Okay, so if you have no tax deductions whatsoever, you don't record any of this, you don't claim any of this, you don't spend anything on this, then what they will calculate the tax on is your gross, okay, your gross income. But if you gather up these throughout the year and you've got the documentation for it, then you can reduce the number that they use to figure out the tax that is paid. That is why those things are important, okay? Now, a tax refund is the refund paid to you by the Australian Tax Office Australian Tax Office. Okay, the refund paid to you by the Australian Tax Office when too much tax has been taken out of your pay. over the year, over the financial year. That's probably the best way to put it. So, okay, they play the what if game. They don't have a crystal ball. They cannot see exactly what will happen in the future. So they actually assume that the gross income is the taxable income. And they base it on that. Okay, so they base the tax calculations on that. And so that the tax is taken out of your pay. But then at the end of the financial year, you go, hey, I've got all these things here. So my taxable income is actually less than the gross income. Therefore, you've taken out too much tax. So you owe me back some money. And that's what happens with a tax refund. Okay, you really, really do want to be overcharged with the tax, because then you get a tax refund at the end of the financial year, which can be quite nice. Okay, so let's look at how this works in reality. Okay, so we've got examples here. Okay, let's look at this one. Jamie has a gross annual income of $63,670 and he has a total of $1,840 that he can claim as work-related expenses. What is the taxable income? Okay, the maths is really simple. What is going to trick some people up is the words. Okay, you've got to understand what these are. So taxable income is the figure that they will use to calculate the tax. Okay, so taxable income is the gross, up here, gross minus deductions. Okay, so the gross is 63,670, subtract 1,840. Okay, so that's 61,830. All right, so that is what they will use to calculate the tax. Righto, Chris earns a gross income of $45,300 and has the following deductions to claim: uniform washing expenses, uniform purchase, and safety gear. What is her taxable income? Okay, so same concept, we've just got to add them up and then subtract. So it equals 45,300. And then we're going to subtract these things. We've got $92 for the washing expenses. We've got $350 for the uniform purchase, and we've got $460 for the safety gear. Plugged it into the calculator, and it comes out as $44,398. All right, so that's the taxable income. That is what the tax will be, or should have been, calculated on, but it wasn't. It would have been calculated on that. Therefore, chances are there'll be some money owing to Chris. Okay, so Otto earns $633 a week gross for 48 weeks a year. What is his gross annual income? That's easy. 633 per week. There's 48 weeks he gets paid. Now that's not saying there are 48 weeks in the year. It's saying that he gets 4 weeks unpaid holiday a year. So should be 52 weeks, but he only gets paid for 48 weeks. So that is his gross annual income. Okay, each week he pays $69.50 in tax. What is the total tax he pays per year? Okay, so the total tax paid is $69.50 times 48. So he pays $3,336 across the year. Okay. During the year, he donated $240 to charity and has $1,300 in work-related expenses. What is his what is his taxable income? So it's gross taxable income, because I'm getting sick of writing that, is the gross, which is that one there, subtracting that and that. So it's 240 plus 1,300. Okay, so 28,844. All right, so let's just stop and think here for a minute. This $69.50 and ultimately that number there, that would have been worked out based on this. Okay, so the assumption would have been made at the beginning of the financial year that this is not just the gross income, but it's the taxable income. And so that amount there would have been worked out based on that. But throughout the year, these things here happen. So this is actually what the tax should have been based on. All right, now, so according to the ATO, Otto should have paid $2,845. Should have had $2,845 deducted from his pay. What refund does he get from the ATO at tax time? All right, so the refund. Okay, so that's what he should have paid, but what he actually paid was this. So he's paid too much. So they owe him $491. That is how tax refunds work. You will get that at the end of the financial year. When you go and do your tax, they'll figure out what you should have paid versus what you actually did pay. And the difference, hopefully, is what they owe you. Okay? Go and do the next page.